Assalamualaikum. Hi everyone. My name is Radia binti Ahmad. My mic number 2652001. Today I will be giving an informative speech about the three impacts of government policy for the bank during this COVID-19.
Today, countries around the world are attacked by COVID-19. The rapid spread of COVID-19 pandemic impacted all industry in Malaysia and affected the national income. In some cases, companies are not able to generate any income for more than 6 consecutive months. As a result, companies closed their businesses and many employees lost their job. Companies are not able to pay their fixed costs. The economy nowadays has brought other issues, especially on human stability. Some are having difficulty maintaining their daily life and some are having depression due to not being able to do their daily routine. The Malaysian government look at this situation as a significant threat. This is because the economic circulation during this pandemic is not going well. Although the economic circulation does not run well, our government still provides some funds to the household, the organization and all the institutions affected by the pandemic. Simple example, the government has given students free data for online learning and pocket money 200 ringgit to survive. Besides that, the government also provides enough adequacy to the students who had to lock down at their university. For your information, I am one of the students who had a lockdown in the university, but I'm grateful because everything is well prepared in terms of beverage, accommodation and medical when we are in lockdown. For the household, the government also gave bantuan bejana and basic need to help constraint during the COVID-19 pandemic. Today, I, as a banking student, I'm overwhelming to share with all of you about the impacts of government policies for the bank during COVID-19 pandemic. For your information, I got all this information by doing some research and from my lecture class. There are three policies that our government has made in this pandemic which have impacted the bank system. Do you all know about the three policies? If not, let me tell you about it. The three impacts of government policy are decreasing the bank's profitability by giving 6-month moratorium, maintaining the bank's liquidity by reducing stationary reserve requirement (SRR), and lowering the loan interest rate by decreasing the overnight policy rate. Now, let us find out and add our knowledge about the first impact of government policies. Firstly, the impact of government policy for the bank during COVID-19 pandemic is decreasing the bank profitability. As we know, our government has announced a 6-month moratorium to give benefit to all the borrowers. Currently, there are some arguments regarding extending the moratorium until the end of September. Here, I want to ask all of you, what is moratorium? In simple understanding, a moratorium can be defined when banks allow their customer to delay their monthly payment without charging any interest on the loans given. Usually, when we delay our monthly payment, we will be penalized with some amount of money. So, with this new policy, the charges will be carried out without allowing legal stand. Hence, it will be affected by the bank's profitability. Why I'm saying like that? According to Dato Amirul Faisal Wan Zahir, who is Maybank's Chief Financial Officer, he said that when the bank exercised the moratorium, the bank expected to lose about 1 billion for the second quarter. So, can you imagine what is the amount expected to lose if government approved to extend the moratorium? When Malaysian Lockdown Restricted Movement Order (RMO) was announced on 18 March 2020, the sixth moratorium was the safer for Malaysian people not to implement their monthly commitment to the bank. Simultaneously, banks still need to pay dividend to all the depositors and the borrowers, but cannot take benefit from late payment. In order to overcome the problem, Bank Negara Malaysia has come up with two options. For the first option, the borrower has to pay accumulated 6-month deferred payment without being charged any additional interest. For the second option, the customer will extend 6 months maturity date of the contract. From my perspective, when the government come up with the 6 moratorium policy, all the banks need to reschedule their financing to ensure the good level of profitability. To add our knowledge, so let's dig it up a bit further for the second impact. Secondly, the impact of government policy for the bank during COVID-19 pandemic is maintaining the bank's liquidity. Our government not only announced the 6 months moratorium policy, But our government also announced the Statutory Reserve Requirement (SRR) policy. The Central Bank (BNM) cut the Statutory Reserve Requirement (SRR) to all financial institutions. For sure, we all want to know what is Statutory Reserve Requirement means. What does it function in banking circle? Statutory Reserve Requirement (SRR) is an instrument for banks to manage liquidity. Banks are required to maintain balance in their Statutory Reserve Account (SRA) equivalent to a certain proportion of their eligible liabilities (EL) to determine the Statutory Reserve Requirement (SRR) rate. Now, what is the impact of Statutory Reserve Requirement (SRR) policy? Based on the article by the Age Market, the announcement from Bank Negara Malaysia (BNM) to cut or lower the Statutory Reserve Requirement (SRR) from 3% to 2% is cautious way undertaken by Bank Negara Malaysia to maintain sufficient liquidity in the domestic financial system. By this policy, bank can cover financial imbalance, create risk to financial stability, and give bank positive net interest income during the 6-month moratorium. Bank will have more chances to jump in all investment platforms to recover the economy. Consequently, when the bank's liquidity is in positive slope, the gross margin also grows, so bank can have funds to lend to companies or to the financial industry needed. They can build new production facility or invest in equipment to help increase production. The higher gross profit margin points a company has a good liquidity and flexibility to innovate, enter a new market, and grow aggressively. A small gross profit margin means a company has a little money to do anything except to keep making its product at the same level. Other than that, banking institutions can use Malaysian Government Security (MGS) and Malaysian Government Investment Issue (MGII) to meet the Statutory Reserve Requirement (SRR) compliant with effect from May 16. According to the New Star on 5th May 2020, Bank Negara Malaysia will release 16 billion worth of liquidity into a banking system. This flexibility is available until May 31st, 2021. The Statutory Reserve Requirement (SRR) ratio remained unchanged at 2%. The measure was part of its continuous effort to ensure sufficient liquidity to support financial intermediation activity. Here, what can I say? When this government announced to cut Statutory Reserve Requirement (SRR), the bank can maintain its liquidity, and at the same channel, it can help the bank to grow its lending contract in terms of mortgage, personal finance, and etc. We can sum up that the lower Statutory Reserve Requirement help the economic cycles well perform. Therefore, let's see the last point. Lastly, the impact of a government policy for the bank during COVID-19 pandemic is lowering the loan interest rate. Before we jump to the last point, let me share with all of you about the policy related to the loan interest rate. For the information, when the bank lowered the interest rate, the banks needs to refer overnight policy rate (OPR) first. Before we explore more about the overnight policy rate (OPR), let us know its meaning first. The overnight policy rate is an interest rate set by Bank Negara Malaysia (BNM) to control the economic cycle's liquidity. The overnight policy rate is kind of interest which is when a bank lends the available funds to the other banks. In the face of COVID-19 pandemic, Bank Negara Malaysia (BNM) used monetary policy to stimulate the economy. According to iMoney Learning Center, Bank Negara Malaysia (BNM) has cut the overnight policy rate (OPR) by 2.5% to 1.75%. It increased the capability of banks to borrow the fund from the other institution. Reducing the overnight policy rate will also cut borrowing costs, improve liquidity, and stimulate economic activity. For instance, before the COVID-19, Bank Z can give lending from Bank X with interest rate 12.5%. During this COVID-19, perhaps Bank Z can give lending from Bank X with interest rate 1.7%. When the interest rate of base rate is lowered, the interest rate also will be reduced. Moreover, while Bank Negara Malaysia cut the overnight policy rate (OPR) to a historic low of 1.75%, reducing the effective interest rate for home loans from majority of banks about 3%, depending on the amounts borrowed. The Public Sector Home Financing Board (LPPSA), which is the statutory reserve body responsible for managing government housing loans, still charges 4% fixed interest rate. The government housing loan is a means to an employment benefit for civil servants, just like a pension. Yet, when the rate of interest of the current home loan in the private sector is below 4%, it feels like a penalty and liability. When Bank Negara Malaysia reduce or increase the OPR in further, the interest rate can move in a tandem based on market average, but never exceeding 4%. Hence, the bank can use the fund to reinvest in any available and stable during this COVID-19. In my view, reducing the overnight policy rate is the best solution to inject the economy. It not only gives the benefit to the bank, but to the household too. In conclusion, during this pandemic, the banking institutions are having lack of funds. So, the Malaysian government come up with various monetary In conclusion, during this pandemic, the banking institutions are having a lack of funds. So, the Malaysian government come up with various monetary policies to recover the economic cycle, especially the impact of government policy give splendid stability to our nation, which are decreasing the bank profitability, maintaining the bank's liquidity, and lowering the loan interest rate. I hope with this speech, we can create awareness about government policies and gain some knowledge. That's all from me, and have a nice day. Thank you.